Stocks retreated back into their sideways consolidation that they broke out of last week. Um, this is the NASDAQ Composite Index, and you can see it fell back into this sideways consolidation. Lost 1.6% for the week. Wall Street tried to convince the market that the Fed would pause their future 75 basis point rate hikes, but the Fed head remarks indicated that the Fed is going to remain hawkish. So it didn't work in spite of positive inflation data. CPI from last week's CPI and this week's PPI. But the Fed heads shut them down. So that's the way it is. We look at the S&P 500. You can see it kind of stayed above this consolidation, but it also retreated, and it was down 0.7% for the week. I think the Russell index was down 1.8% for the week. And the Dow Jones was completely flat, but it is obviously in the best shape. I would consider this one out of. It's the only index that's not in correction mode right now is the Dow. Last week we had 12 open orders and we got stopped out of all of them, so we don't have any positions. But if we look at what the model had, we gained 12% month to date, 139% year to date. And we got $925,645 in cash. That's not bad. If you think that we started with $100,000 in cash in January of 2020. So we're doing really good. Obviously, we're beating our benchmark of the S&P by 156 percentage points and the NASDAQ by 168 percentage points. So we are crushing the market as usual. Now let's see, let's take a look at the heat map. Now here we had NVIDIA. They missed on their earnings and the stock was down 5.6% for the week. And then Amazon down 6.6% and Tesla down 8.05%. They continued sell off after their earnings from prior weeks. Well, that's about it for this market. Next week, we've got Thanksgiving coming up. But, as always, we'll trade what we see, not what we think. I'm Greg Gallagher. Good luck and good trading.